All right, everybody. So I guess I'm live. Hopefully this will work out just fine. Wanted to do this quick live video and kind of go over the really basic parts of Nadex, how you place an order, why the prices are a little bit different than what you look at if you use MT4 or Thinkorswim, um, why it looks a little confusing, and go from there. So without further ado, I will take this off and I'll show you my screen. And we want this. Okay, so this is Nadex. Let me see if I can present to everyone. Okay, that should make it bigger for you guys. And let's see. The first one I've done, so I want to see if there's, and that should make it bigger for you guys. And so that's gonna pause. And then, all right, so let's see. There's a chat on YouTube in case you need it. Put that up there. And then I'll put Skype over here. And all right, I'll make this as big as possible. And that looks like you guys can see me just fine. Okay, sorry, let's get this going. So I'm assuming that you guys are gonna be able to figure out how to get into Nadex. So I'm not gonna go over that. This is obviously my demo account. I have not traded Nadex live. I'm still trying to get myself familiar with the situation or the platform itself, but I understand it. I understand how it works, so I thought I could share. When you first log in, you're going to get this, and you're going to see your major contracts from what looks like commodities in the beginning. So you got copper, silver, gold, corn, soybeans, crude oil, natural gas, and you get your Forex pairs. What you want to trade is over here on the Finder. And it really is up to you on what kind of trader you want to be. If you want a little bit wider of a thing, so if you want, let's see, Forex binaries. If you want to trade, I like Euro USD. It's what I do mostly. You can either trade for a few hours or close of the daily, 3 p.m., or a weekly time frame. So these are more your bigger moves type of situation. I know Chris Dane has been kind enough to share a couple of signals for the daily, and that's where you would go. You would just go over Forex binaries, whatever pair he says, and then the daily. So that means whatever time you end up entering this trade. So if I click daily, now only the daily charts or the daily levels will come up. Okay, and you can see that these are the higher probability ones, the bids and the offers, because that has the most price movements. And we'll explain what the prices mean in just a minute, okay? All right, so this looks really confusing, and I know it does. It did to me, but it's okay. Don't fear, we will figure this out, okay? I know that there are a lot of us that want to trade the lower time frames. For those of us that were in the FX Glory issues or era of last year, you have 20-minute binaries, because most of FX Glory was on a 15-minute type of window, expiry, a 15 to 30-minute window. So this is kind of in that middle. The only problem with that is that there is no Forex. So if you're a Forex person, you're not going to be able to trade this in the 20-minute time frame. However, if you want to do your main US 500, these are different indices that you can trade off of for just stocks themselves, not individual stocks, but as far as the different indices that are out there. And then if you're more of the quick hitter scalper types, you have the 5-minute binaries on Forex. This is where I've been practicing. I'm not going to say it's the best way to practice or everyone should do that. It's all up to your individual risk tolerance. 5-minute binaries are highly risky. I follow the methodology of, if I'm going to trade a 5-minute binary, it is going to only be something that is in the money and have the odds in my favor. To get started on what this screen looks like before we actually go into placing a trade, what you'll see are these two columns with flashing boxes everywhere. Flashing boxes means lots of price movements or a contract has been placed. I guess I'll start here with the bid size. The bid size is the number of contracts outstanding. A contract means $100. So one contract equals $100. every $100 is broken up into 2 different price points, because that is how you divide the $100. So if I say, well, let me explain that once we have the buy window up. The bid is what people are willing to sell at. The offer is what people are willing. Bid is where they're willing to buy. Offer is where they're willing to sell. So if I want to buy this, I have to buy the offer. If I want to sell short, I have to take the bid. Okay. So let me open up. Let me say I want to do this. So here's my ticket. And let me get one that's more in the middle so we can see. Okay, so let's say I think that by 12:10, right now it's 12:07, so in 3 minutes times, or 2.5 minutes, that the price is going to end above 1.2451. Okay, that's what this is saying. That's when I pick this level, I am saying that the price is going to go above 1.2451 in the next 2 minutes and 11 seconds. If I believe that to happen, then I would place a buy order. So I would click on this price, and well, let me explain this on a longer time frame because these guys are just going to go like crazy. I apologize. Yeah, let's just do the daily here, and that way we can, same chart, just I don't have to worry about the price changing on us so much. Okay, so AUD JPY, again, I am saying that the price level I'm looking at is $87.60. I'm either saying it's going to go below $87.60 or above $87.60, and the expiry time is going to be 3 p.m. So I've got a little less than 3 hours to decide what for the price to either above or below this line or this price mark. Okay, let's say I believe that the price at 3 o'clock is going to be 88. So it will be greater than 87.60. So I would say I want to buy the option. Okay. And then I have 2 ways to buy it. I can either set a limit or a market order. Okay, that's what that drop down does. The limit means I would physically enter how many contracts I want to put. For example, I'll just put 1 contract and I would list the price. You can see that the current market is at 42.75 and I can put a limit of whatever. So let's say I want to spend no more than $40 to get the access or the rights to this $100 contract. Okay, let me say that again, because remember, we're dealing with options. Options are not shares in a company. Options are the right to buy shares in a company. So I'm willing to spend $40 to buy one $100 contract, and that is my limit order. You can see down here that my total risk, my max loss is $40 because I'm willing to spend $40 for that $100 contract, which means if I win, if this is above 87.60 at 3 p.m., I win the whole $100. So I bet you this price is going to be higher at 3 p.m. And I'm going to bet you $40 in the total price of $100. So if I win, I get 100. If I lose, I get 0. Binary options. Okay. Every contract is worth $100. So if I'm spending 40 to get that contract, my profit is 60. 100 minus whatever my purchase price was. So 100 minus 40 gives me a $60 profit. Now there's no real limit on the number of contracts that I can enter here. Just know that this is not automatically filled. I actually have to find somebody else out there on Nadex that is willing to bet that, no, I think that the price is going to be below 87.60 at 3 o'clock, and I'm willing to take that bet. And because I think I have a better shot at it, I'm willing to pay you the $60 to get access to the $100, which means if I'm selling at $60, my max profit is 40, and I'll show that in a second. So let's say I want to enter 10 contracts. Okay, that means I'm buying 10 contracts of $100 at the price of $40 per contract. So that means 10 times 40 is 400. That is my maximum risk. That is my position size. Remember, every contract is worth $100. So 10 contracts times 100 is a total gross revenue of $1,000. I have to spend 400 to get access of that, which means my max profit would be $600. Hopefully that makes sense. Now it does get a little more confusing on the sell side. Okay, so let's say I don't believe at 3 o'clock price is going to be above 87.60. I think it's going to be below 87.60. So I'm going to go sell. Now I still am willing to spend that buy price of 40 bucks. And now you can see, if you look at the buy, my max profit is 600, my max loss is 400. If I leave the price the same and I flip to the sell side, my max loss is $600, my max profit is only 40. Okay, the sell side is the opposite of the trade. So if the trade, I'm willing to buy this at $40 and there's only 100 bucks in there, the opposite is $60. Okay, let's drop this down to 1 because that makes it a little bit easier. Now let's say I'm willing to buy at $80 because I think it's really good. It's really good odds that that's going to be above there. So I'm willing to spend $80 to only make $20. All right. So remember, there are 2 people to every exchange. $100 is at stake in every exchange. If I'm willing to buy something at 80 bucks, that means my profit is only going to be 20. On the flip side of that, remember, I'm still, the guy next to me is willing to buy it at 80. I'm willing then to sell him that contract, okay, of the $80 buy price, which means my max loss is 20 bucks. That's what I put up on the sell side. The profit for me is $80. So if the buy side, whatever the price is, that's the amount of money you put up. On the sell side, with the money you actually put up is $100 minus whatever the buy price was. Okay, so whatever the price is. So right now, the price is for selling is $52.25. That's what I locked in at. So my price on the sell side is equal to my profit. Let me say that again. My buy price, this price, is equal to my profit on the sell side. So if I do a high price, like let's say I go $90, right? $90 is the buy price. I take whatever to figure out how much I'm actually spending on the contract on the sell side, I take 100 minus the price, and that's what I actually am investing. That's what I'm risking. So on this sell side, if the price is 90, I'm only going to put $10 in that trade. My max profit is going to be 90 bucks because I'm on this sell side. If I'm on the buy side, the price is what I'm spending. So that means I put up the 90 bucks. There's only $100 out there. So that means my profit's only $10. When this happens, that means if you're willing to spend $90 for a $10 return in profit, you better be darn sure that price is going to get above 87.60. Okay, so rule of thumb. If you can do a 50-50, you don't have any real edge on probability standpoint. According to Nadex, there is no benefit on the buy side or the sell side. You're going to put up 50 bucks on the buy side. You're going to put up 50 bucks on the sell side. Okay. Now I believe that I'm willing to spend $80 to be on the buy side because, and let's say that is the current offer price of 80 bucks. And I believe you can see, okay, so like this guy. Do you see how there is $96 as your current offer? That means people are really, really sure at this moment in time that the price at 3 o'clock is going to be above $87.40. And they're so confident in that for me to get on the buy side at this level, I have to be willing to spend $96.25, which means if on one contract, I'm risking $96.25 to make $3.75. Now, that's not a good return on investment, but at this moment in time, it's almost guaranteed money. Okay? On the opposite side of that, if I go to the sell side, there is a very, very, very small chance that price will be below $87.40. And that's because based in this pricing. So on the sell side, I'm willing to only risk $3.75, but my profit is $96.25. So on the sell side, in this case, when the numbers are really high like this, that's good for us. We're only going to put in a little bit of money and for a lot of ROI. Now, it can be good for us if we truly believe some type of event or news or something's going to come out to tank the AUD JPY. So the JPY either gets really bullish or the Aussie dollar gets really bearish in that amount of time, and the price just tanks. Okay, if that happens, then we only put up $3.75 to make 96 bucks. But at this moment in time on this exchange, that's a small possibility. So you have to weigh your risks. Do I go with the short play, the $96.25 that I have to risk to make a really tiny amount, but it's good probability that that's going to happen? Or do I, risk the farm, so to speak, but not that much money? All right. So hopefully that makes a little bit of sense and y'all aren't completely confused. If you are, I apologize. And I'll answer any questions you have in the Skype group. Okay. So let's look at what I actually look at when placing the trade, because if all I'm doing is looking at these, oh, and let me talk about the indicative price real quick in these different levels. The indicative price is what the current price is according to Nadex. Okay. These are the levels that you're going to say that it's above or below. Current market price, this is where you're going to say it's above or below. Now, if you look at a charting software, okay, now what are we looking at here? We're looking at AUD JPY. So I need AUD JPY. And we'll look at just the prices, okay? If you look at my price, I am at 87.62. My indicative price is currently 87.63.2. There's a big difference. Anywhere on average about 10 pips. I think if I'm saying that correctly. There's usually that second digit there, it's off. Okay, now why is that? Is Nadex trying to scam us? And those of you from FX Glory were probably like, man, they always have that pad in there. They're always trying to screw us over. That's not true, believe it or not. Nadex is not trying to screw us over. MT4 isn't trying to screw us over. TOS isn't trying to screw us over. They're just reporting different data, okay? MT4 and TOS by default show us the bid price, okay? So they show us the price that's related to this. And every stock or exchange or Forex or commodity, there's bids, there's asks, and there's usually something in the middle. And that something in the middle is called spot, okay? The charting software typically shows us the bids by default. And that's usually the lowest price, okay? Because remember, think bid is buy, B and B. The bid is the lowest price available because that's where people want to buy at. The ask is the most expensive price because that's where people want to sell at. The spot is somewhere in the middle. And like most of these binary brokers, including Nadex, including FX Glory, including Cantor Exchange, all reflect spot price. Now, spot price is about 8 to 10 pips above the bid price. It's just what it is, okay? I'm not going to go into how to change the settings on here. There is no way to change a setting on MT4 to get it to be spot price. There isn't. However, there is a third-party app that you can add for free. If you go to this TraderBot Marketplace, I have no affiliation with them. I just have found them, and I was able to do it. So you can see they will actually fill in the bid price, and they will create this secondary candle overlaying your main candle. But it got really confusing to me because I was like, that looks really jumbled. But there is a way to do it. That's the only way I've found to do it in MT4. To do it in TOS, just Google it. There is a way to change the setting in TOS, Thinkorswim. And oops, sorry. I can't load that in right now. Anyway, there is a way to actually just change the normal candles to the spot price. Okay, but that's why you see the price difference of the indicative price and your charting software. All right, so let's go into, I don't trade off of just random numbers. I want to see the chart as going, And because the indicative price is different than what MT4 is showing me, I've been trading this in this methodology. I will go to MT4 or TOS or whatever it is, and I will go on to the higher time frame. So I'll start at the daily and I'll say, okay, this is AUD JPY. Where are we? On the daily chart, to me, we're at the bottom of a range, okay? We're due for it to, we're about to touch this lower Bollinger Band. We're in the bottom of a range. So I would expect, you can see that this price is probably on its way up. It'll probably end midway. I do not expect this to be a big green candle. It already had its down move for the day. That's my guess, okay? It makes sense to me that that's true because AUD JPY are both on the other side of the world. They're asleep right now. It's like midnight over there, okay? So the markets are closed. You're not going to see a ton of price movement here, and that makes sense why you're seeing this, okay? Now, our market is open, so the people mainly trading this at this moment are just the US based, okay? Because I believe even at this point, the Euro markets are closed. So we're the only market in town right now playing this thing. That's why you'll see most of the price movement overnight, okay? Because that's when their market is open. Make sense? Awesome. Then I'll go down and I'll start working my way down and saying, okay, the 4-hour chart is not much different than the daily. You can kind of see how well it's there. We're definitely at the bottom. We're not going to build a hammer because this price this wick is too high. The bears tried to push it down outside of the Bollinger Band range. It has not happened. The bulls have taken back over. So I expect on these lower time frames to probably be close, at least in the last hour here, reversing this trend, because you can see we were up, down, up, and then coming down, and now we're going to start our uptrend again. So again, on the 30 minutes, we can see that we have an up. On the 15 minutes, we have an up, and then now we've got a little bit of a market correction here. On the 5-minute, you'll have bearish because 15 minutes is going down. 5 minutes is going down. You can see this really narrow range that it's trading at, not much volume at all. So I probably wouldn't trade this live because, well, there's not a lot of movement for me. But you can see we had a top here. We got a couple of gravestone dojis, and then now we're in a downtrend again. So we have our general consensus that we were in a downtrend on the hour, in a downtrend on the 4, daily is down, 30-minute is up, but still in context of a downtrend. 15-minute is down, still on a downtrend. So reason I go back and forth on these is to get where is the general direction of the market, because I like to trade with the trend, okay? So if I believe that this is more of a downtrend, I'm going to be looking for more sells than buys, if that makes sense. All right, so we'll go to 5 minutes, and I don't even know if AUD JPY is an option. No, it's not. So that analysis was moot. Yay. I'm not going to go back through it because I'm not going to place actual trades, but to just show you, click on the charts, and then this stuff starts to make a little bit more sense. Let me get this full screen to you guys. Okay. Now, here, let me get these expanded out a little bit. There we are. Now you can see we had a big pop-up in the Euro USD. We went way above the Bollinger Band, so common sense would say it's going to come back down. It's not going to continue up like that. So I would wait, as far as like strategy, I would wait for this move to be done, and I would wait for a top signal. You can see here, here's an example. We have one big green, and then we had a red, and then a couple of reds in a row. So you have big shoots up like this. Wait till the move is finished until we have a red candle that closes. And then see, these are 1-minute candles anyway, and you're going to trade in a 5-minute range. So just wait for this move to be finished. And then once you see that one red, you're probably going to end up getting the whole move that way. So we just ended that candle full bearish, full bullish. It's going to continue to go up. You saw that it tried, the bears tried to win. They didn't. They push it up. There's no upper wick. That's a really strong up move. I don't know if news released or whatever. Anyway, back to the stuff that's important. Oops. So you guys can see, okay, so over here, these are our price levels, all right? So 12469, 12467, 12465, 463, and 61. These correspond to these guys, 4, 6, 9, 7, 5, 3, and 1. Now, you can decide whatever you want, okay? It's your business. You can trade off of these. I would much prefer to actually physically see the levels, okay? So here's that line in the sand. I can see that now we're starting to lose steam here. You can see the bears are pushing that down. I would expect that, I would expect that we would get, there's your gravestone or your shooting star, and now we're going to come back down to earth. So wherever I'd be at, if I was going to look for this in a down move, remember I said that on the sell side, if you are at 50-50, so here, if I click this, I want to trade, where'd my little guy go? There's my trading window. Oops. Chart. There it is. If I click on this, that opens up my ticket. I'm gonna get that guy back. Usually I'll pick the range and I'll watch it to make sure it's where it needs to be at. Oh, so it faked out. So there must be a real big push or some type of news here. I don't know. That's why I'm not trading. Anyway, so here's the level that we're at. And this is why you have more than one screen. So you can see both at the same time. I wonder if this can stay up at the same if I click this again. Yeah, okay, cool. So it'll stay like that. Let me get this spread out so you can see the different levels. I don't really like this too much. As I expand it out, sometimes it goes funky. Oh, there we go, back down to earth. Okay. So we can spread this guy out. Come on, there we go. And then there. Okay, so now you can see them at the same. Okay, so let's say I believe that this is going to stay underneath it. All right, so that's my sell option. If I do, yes, I want to sell, I want to do one contract, I can see that I am investing $69.75, and my max profit would be $30.25. Now, I'm going to tell you right now, with this amount of volatility and price movement, they don't know what in the world they're doing. Do not trade stuff like this. Wait for it to figure itself out, especially when you're trying to pick tops. Never try and pick a top. I mean, look at this craziness, right? That has to be news or something. So people are like, holy cow, we just had this big run up. Let me take profits. And then people that are FOMO'd and say, wait, I need to get in the move. They're trying to buy in. Okay. Wait till they figure itself out and it makes a predictable move. Now, what's predictable in this case? Figuring out a level. So like here, I don't think this price is going to go in the next 39 seconds. I don't think the price is going to go below this mark. Okay. You don't want to trade in the last minute either. You want to trade in like 2 minutes. Let's wait for the next expiry, and you can see that this stuff will come up, and maybe we should open that up a little bit. I still think you're going to get more plays down here in the next 5. Make that a little bit less extreme. I try not to see if you go too narrow on the channels. It makes the little boxes go, so you want to expand those out, but I don't like making them so big that the candles look ridiculously large either. Kind of screws up the mentality of it. Okay, so we're building a top, and let's say I believe that I think this is going to be more of a down move in the next 5 minutes, to be real honest with you. So I'll be looking from a short side perspective, because I don't think it's going to go up further from here, and that's not a good play, only because that means my profit on the red boxes are listed. So profit is in the red boxes, so I would only make $7 here if I invested. On the buy side of things, I have to say, okay, that's what my cost is. My profit is 100 minus that. So if I'm looking here, I think this may be a good spot to kind of put my stake in the ground, because I don't think it's going to get above this line. So I would enter that and say, okay, I'm only going to risk $17 or $14. Boom. Now, it's kind of a sure bet at 28.75. Remember, on red side, that's your profit, okay? So sometimes when I'm looking at this, a lot of people do limit orders, but see how it changes? Sometimes market order for me work better, only because I want the most current price. If I decide this is where I'm going to put my foot in the ground and this is where we're going to make some money off of it, then that's what I want to make it, you know? It's just me. It's just my personality of it. But for here, you know, if you want a limit order, or market order, whatever you want. Market just means whatever the current bid is, that's what you're gonna put in. So remember, on the bid side or on the sell side of things, whatever the price is, whatever this number is, that's your profit. See how I'm risking? That doesn't make sense, but that's like that. That's lagging or something, or saying that's $110. I don't get that. Market order. What happens if I go buy? Huh, that's really weird. Something screwy, guys. I don't know what the deal is, because if you look, that's $110. It's not $100. So I don't understand that. I do know that the price is going to be above here. It's not going to fall because you're seeing that it's building an uptrend. So there's my floor. Maybe I'm wrong. Let's see here. Does that give us one? Okay, no. Yeah. Yeah, okay, so now it's $100. I don't know what the problem was with that last one. Anyways, when you have the offer, now we have no idea. It's going to test the support line. I'm trying to not trade. Sorry. So you've got your buy side. I think the price is going to be above this line in the next minute and 47 seconds. If I believe that, I'm willing to put $81 or $63. You can see the price really does fluctuate quite a lot. But if I'm willing to put 55 on this, I'm willing to make 45 on it and go from there. Personally, I would never trade this because it's the last line and it's right at it. So we go from out of the money trade to in the money trade. I would much prefer to be up here because it's a little bit more of an insurance policy, if you will. I know that you're not going to make much money here. You're going to make 25 cents profit right now. So you're risking almost $100 to make almost nothing, but it's almost a guarantee. So you can place 300 different things and maybe make some money off of it. But you can see, I think that, you know, the down move was for sure because it built the top here. Down move is for real. There's no way for me to really trade off of this because it was set up right in the middle of this and it had a big cascade effect. So order placing is timing mixed with direction. And that's why I say the 5 minute is the most complicated you can possibly get. Okay. Hopefully this wasn't more confusing than helpful. Just know that here, let me see if we can wait for this to come up the next one. It's only got 19 seconds left. When you first open up a chart and you first start looking at prices, especially on the 5 minute, I highly recommend do not trade your first gut or the first expiry window or possibly the first 2 expiry window. Get a feel for what the market is doing. Check your news. I didn't. I just was planning on, you know, because what caused that giant move? I have no idea. Okay, could be news, could just be random market movement. I do know that we are kind of holding to a 50% retracement off the whole move. So there's the bottom of the move. There's the top of the move. It came back about 50, 40, 50%. So let's say here's my line in the sand. I think that it's not going to go below here. I'm going to put that there. And then I think I'll put $85 on it, which means my max profit is 15. But I'm pretty secure in that investment, right? That means it's got to hold there for 4 minutes and 13 seconds. But as you can see, it would have been a pretty safe bet had he just done it. Because I don't think that's going to come back, right? Because whatever's going right now, the bulls are squarely in charge, and you're going on an uptrend. If I believe that the price is going to be above here, now that's the only real spot right now for money. Everything else is in the 90s, and that's not a lot of profit. Remember, when you're on the buy side, you take whatever the price is, subtract by 100, and that's your profit. On the sell side of things, that's your profit. Okay, so if you believe the price is going to go lower and you click the red box, that's your profit. Right now it's at 61 here. Let's go market order. See how the price here is the same as my max profit. The number here is the number here. So whatever that number that's ticking, that price, that's your profit. Okay, the higher this number, the less likely it's going to be. On the buy side, we'll flip over to here. You have to subtract the 100 to get to whatever your profit would be. See this number? 100 minus 70 is 30 bucks. That's my profit. So you can see my buy price is 75, my profit is 28, and obviously it's changing based off of the market order. Okay, you can do a limit order if you want. That says I don't want to spend more than 83 bucks. That may be a good thing, that may be a bad thing. I don't know. It's up to you. It's how you trade. Play with it, figure it out. That's what demo is for. Okay. That's it. That's how you place a trade. Hopefully that makes any kind of sense. You have questions? Hit me up. Bye for now.